Okay, hi. So today we're going to cover this topic, what are the taxes I need to take note of in Singapore. And this actually stemmed from a question that was emailed to us, and I'm just going to cover this in this YouTube video. Okay, so generally, right, there are two types of taxes that all of us need to take note of. If you're coming to Singapore to start a company, like this person who asked this question is, so I'm answering in that context. Okay, so this is actually a client who is looking to move to Singapore, move his business from a foreign jurisdiction into Singapore. He's concerned about the taxes that he would have to pay. So generally, right, there are two types of taxes that he needs to take note of. One is corporate income taxes, and this is for companies. Then another one would be personal income taxes for individuals. And both taxes are collected by the Inland Revenue Authority of Singapore, or IRAS. Okay, so I'll just cover both because sometimes, when people ask me what taxes do I need to pay, right, then generally you have to pay two taxes. Okay, so if you're going to incorporate a company, then you'll be under corporate taxes. Then if you are going to incorporate a company but you're going to draw maybe like a salary because you're employed by the company, then that will be under personal income tax. So for corporate income taxes, right, the companies need to report their corporate income to IRAS for the preceding year. So an example of this will be that the company will need to report for the financial period that ended in 2023 for year of assessment 2024. So like for this year, corporate taxes, right, this year is 2024. And when IRAS sends the bill, IRAS will send the bill for year of assessment 2024. And what this means is that they want us to file the corporate taxes for the period that ended in 2023. So for example, if let's say the company's financial period was 1st January 2023 to 31st December 2023, then that period, because it ended in 2023, it will have to be filed in year of assessment 2024, which is this year. And the deadline for the filing will be 30th of November 2024. So it's 30th of November every year, and you e-file it. That means you do it online. Okay, so usually our clients get us to do it for them online. And how much is the corporate income tax rate? Singapore has a flat corporate tax rate of 17%, but this before considering tax reliefs. Okay, but one thing to note, right, 17% is the flat corporate tax rate. There's the effective tax rate is actually a lot lower. Okay, and how this is calculated is through the many tax reliefs for Singapore companies. And what you need to do is that you need to account for these tax reliefs to count the effective tax rate. So let me go through this. There are tax incentives for new startup companies, or tax incentive for companies if the company does not fall under the category of new startups, or if let's say it is not eligible for the tax incentive for new startup companies even though it is a new startup. So new startup is for the first 3 financial periods from the date of incorporation. And then there's actually a corporate tax rebate which was announced recently in the budget announcement by the finance minister. Okay, so corporate income taxes, I just do the calculation for new startup so that I can show you guys how much taxes or how much effective tax a new startup will pay. So the tax incentive for new startup, right, 75% exemption on the first 100,000 of normal chargeable income, and a further 50% exemption on the next 100,000 of normal chargeable income. And then for the year of assessment 2024, right, the companies will receive a 50% corporate tax rebate, which means that whatever taxes that the company is supposed to pay, IRAS will only bill you half of that. Okay, and the tax incentive for new startup, 75% exemption on the first 100,000 means that whatever amount you make on the first 100,000, IRAS will only tax the company based on the 25% of that first 100,000. So if the company makes 100,000, then IRAS will only tax the 17% on 25,000. The remaining 75,000, right, IRAS will disregard. Then after you get that tax amount, then you would apply the 50% corporate tax rebate. So example of this, right, chargeable income, let's say, is 80,000. That means the company makes a profit of 80,000. So how does the profit work? Simple calculation would be revenue minus expenses. You need to know this because later I'm going to compare what's the difference between corporate income tax rates, income taxes, and personal income taxes when you are both the shareholder and the director. So for example, right, the company makes a profit of 80,000. then there will be 75% exemption on the first 100,000 of normal chargeable income. So this 75% means there's a 60,000 exemption. Then the chargeable income after the tax incentive, right, is 20,000. So the corporate tax rate is 17% of 20,000, which is 3,400. And for year of assessment 2024, right, the finance minister already announced that there's a 50% corporate tax rebate. So the companies will not have to pay this 3,400, but instead will have to pay this $1,700 in corporate taxes only. So while the effective tax rate is 17%, right, while the corporate tax rate is a flat 17%, the effective tax rate is actually 1,700 divided by 80,000, which is 2.125. So the effective tax rate, right, after the tax incentive and the rebates, right, is actually 2.125% only, as compared to the corporate tax rate, which is a flat 17%. And then this is the personal income taxes as a tax resident. So the personal income taxes is for 80,000 income is actually $3,350, which means that if a company makes 80,000, the company pays less taxes than the personal income taxes of a tax resident in Singapore. So if you go out and get employed, and then you in your own personal capacity make 80,000, your taxes is $3,350. But if you have a company that makes 80,000, the taxes is less than that. It's actually only $1,700, which is actually quite significant. It's almost half. In fact, it's just slightly under half of almost half lah. Okay, so if you 3,350, you divide by 2, right, it's almost 1,700 only. So a company pays a lot less tax as compared to personal income taxes. So then what does this mean? So a lot of clients, right, they actually come to us, then they say, oh, how can I lower my tax liability? So in essence, right, the company's profit is essentially the revenue minus the expenses or the cost. Okay, so wages are also part of a company's expenses. So this very simplistic revenue minus expenses equals to profit type of formula, right? Just keep that in mind first. Accounting is not so straightforward, but in general sense, right, this is how we compute profit. Okay, and wages are part of a company's expenses. So therefore, when a company pays its employees wages, that's actually included in the expenses of the company. So like if the company pays its directors a higher salary, then obviously the expenses increase. Then revenue being constant, revenue minus a larger cost, right, then the profit will be lower. So when the profit is lower, then the company's profits lower, then obviously the company's corporate tax will be lower. But then there lies the calculation or the decision from the company and and the director. So if let's say you are both the director and the shareholder, you can decide not to pay yourself. The company can decide not to pay the director such a high salary. Instead, the company can pay the director a lower salary and leave more profits within the company. Then the company will pay taxes, and then the company can issue out dividends to its shareholders. And in Singapore, there's no tax on dividends. So when a company issues dividends back to the shareholders, it is post-tax. That means that the company already paid the corporate taxes, and the remainder, right, whatever is left after paying the corporate taxes, right, is declared as dividends and then given back to the shareholders. The shareholders don't need to pay personal income taxes on these dividends. Essentially, you can think of it as every dollar in Singapore can only be taxed once. That's what I tell my clients. So if let's say the company has already paid taxes on these profits, then it cannot, when the company issues dividends back to the shareholders don't need to include this as earnings in their personal income taxes. Okay, so imagine a scenario where the director and the shareholder is the same person. Let's say it's me. Then I want to reduce the total number of taxes that I pay to IRAS in both the company capacity and the capacity of a director as an employee of the company. Then what I can do is that I can reduce the salary that the company pays to me. Instead, the profits are left within the company, such that the company's profits is higher, but my personal earnings is lower. So my personal income tax being a higher tax rate as compared to the corporate taxes, right? So I let the company bear more tax burden, and then after that, eventually the total amount of taxes that's paid to IRAS, right, can be lower if you do your proper calculation. Okay, so this is what I just mentioned. So if you're both the shareholder and director, you can receive both personal income as salary or director fees as director, or dividends as a shareholder. So if you're both the shareholder and director, right, the company can either pay you salary or director fees for your position as a director, or it can pay you dividends. That means the company make profit already, declare to IRAS, then after that pay the taxes, the remainder can issue out as dividend back to you. Okay, so these are the taxes that if let's say you're thinking of setting up a company in Singapore, then you have to take note of. And these will have implications on the total tax paid to IRAS from the company and the individual. Okay, so if you have any questions, right, you can email us. This is the email hello@rafflescorporateservices.com, and this is our corporate website, and this is our price list and services website. Okay, so that's all from me. See you in the next video.